You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. I got the chat open, guys. Thanks everybody for joining. We always get on here about 10 minutes early, say good morning. How's everybody doing? Chuck, Jeff, Kenrick, Laura, Harry, John, thank you guys all for joining. Really appreciate it. So, I've been trading for the last 27 years. I moved to Chicago right out of college to join the exchanges. I've worked at the Chicago Mercantile Exchange, the Board of Trade, the Chicago Options Exchange, and now I get on here every day the market's open, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. Brad, Don, Navi, guys, thanks for joining us live. We are live, so if I do goof or make a mistake, it's live. Sorry. Today, we're going to talk about three things. For the last week, I've been going over 5 different charts. These 5 charts are what I believe needs to turn in order for us to be out of this scary bear market woods. I want to go over those 5 charts. Let's review them. I also want to celebrate a 1,200% return in our Discord. Expect the Glockenspiel coming soon. And then finally, Merck, a big pharmacy company, has been kind of a crappy trade. It's been a dog these last couple of years. But all of a sudden, this last week saw $30 million in call buying in Merck. Why would somebody do a $30 million order? Well, I don't know exactly why, but how about we give them the benefit of the doubt that they know more than we do. That's why professional traders follow unusual options activity. Because when they see a trade for $30 million, they're going to give the benefit of the doubt to that institution or endowment that they know more than we do, because that stock is probably going higher. So we're going to look at that trade too. Let's go over to the slide deck. I got the chat open. I'll make sure to get to all your questions. If I miss any of your questions, I'll make sure I go back and answer your question. Screen share. A little slow going. Hey, Telvin, are we okay here? There we go. We're okay. Everyone settle down. It's going to be fine. All right, here we go, guys. Wow-wee. It's not often I get to say wowie in the morning. Well, yesterday, Kate, I picked up a few SPY calls for 25 cents. $25 investment turns into $325 by the close. And that is a 1,200% gain. And when we see those kind of gains, we like to celebrate with a Glockenspiel and a clap. Great job. Geez, Kate. Carmine, you bested him, his 313%. So really, really great trade. Way to go. Wow-wee. I got something pretty exciting for you guys. A lot of people have asked for this, and finally, we are going to release a 1-month option for our advanced notice program. Today, you can join for $199 per month. So usually, we only do this as an annual, but now we are releasing this as a monthly option. So I'm going to throw that link in the chat for you guys. And then we're going to go over to the 5 charts. Boom. Putting this in the chat. We finally have a monthly option for all of you guys who have been asking for advance notice. Join us. Oh, and even better, 30-day 100% money back guarantee if there are any issues or if it's not exactly as we say it is. All right, yesterday I shared a document with you guys. And that document was all the optionable shipping companies. If you have not yet accessed that document, April 28th, which is yesterday, guys, go on YouTube. Underneath the supply chain PDF, is underneath the video. So people have been asking about this. The supply chain link is under yesterday's video. Go grab it. Let's talk about those 5 charts. 5 charts we shared 2 weeks ago, and we've been following them ever since. We're going to go through each one of those charts because we need to see, are we out of the woods yet? So let's go. Here are those charts. And we will go in order. The first chart is going to be, actually let's not go in order because it'll be easier. Gold versus silver. Here's gold versus silver. Gold versus silver has gone one way this whole year, pretty much. Where my mouse is, right here, this is 4-2, Liberation Day. After Liberation Day, gold-silver ratio went straight higher. We need this to turn around in order for the market to chill out, in order for risk to chill out. It is calming down right now, but it still has a ways to go before we're out of the woods just yet. So gold-silver ratio, that's one of the 5 charts. The next one is going to be the VVIX. In the chat, guys, have you been following the VVIX, the VVIX? The VVIX is the VIX of the VIX. Okay? The VIX is a 30-day measure of risk, right? The VIX is a 30-day measure of VIX. Well, instead of following the VIX, guys, I want you to follow the VVIX. The VVIX will let us know how much risk is in the VIX. The VVIX has completely reversed. So we could say the VVIX is giving permission for the market to rally. VIX 9D. We talked about the VIX is a 30-day measure of volatility, right? Well, the VIX 9D is literally the first 90 days of those 30. Computer's a little sticky today. So VIX 9D traded up April 2nd. That was a little bit after April 2nd. But look how much it's come in, right? The VIX 9D traded up to what? 185. And now last trade, we have 26.52. Now that has come down considerably, 26.52. But historically, the VIX 9D is very, 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 very expensive. We need this to come down lower in order to be out of the woods. So the VVIX, this has come low enough. Fine. I think we're out of the woods. The VIX 9D, we need some more time. We need it to continue selling off. Gold, silver, it's trying. It could do a little bit better. One of the most important charts, and this is what we're talking about often in our Discord community throughout the day, is the yield curve. The yield curve, and right now I'm showing this as the difference between 2-year notes and 30-year bonds. ZT minus ZB is what we're looking at here again. Liberation Day. Liberation Day, the move straight up as the market goes straight down. Well, as this rallies, the market gets hit, rallied a little bit, still kind of offered, still trying to play its role in getting this market to get a bid underneath it. It's trying, still has a little bit ways to go. The final chart to check is going to be on MUB. Now, MUB is something we started following 2 weeks ago, and MUB is municipal bonds. Now, municipal bonds are not something that we're normally watching very closely unless risk gets elevated. And risk is elevated right now. The MUB got to pretty scary levels, down to 100 or 101. If we look at some historical information on the MUB, let me show you this because I want to show you why I was so concerned and why we were watching the MUB so closely. Here's what she looks like. MUB trades down to the same level 23, 22, and even COVID. If the MUB continued to get hit, this tariff pullback would turn into a credit pullback. Well, we are all happy to see the MUB is strong. The MUB got down to 101 or 100 and right back to 104.30. So the MUB is doing its job. VVIX is doing its job. Yield curve is trying to do its job. Gold, silver. Really, guys, it's just that VIX 9D. Waiting for that VIX 9D to chill out a little bit more. And we have a very good chance with the economic data for the rest of this week. We have economic data on Wednesday, and then Friday is our non-farm payroll number, which is the first Friday of every month, usually a very, very volatile number. Any other questions, guys, on these 5 charts before I move forward? Overall, these 5 charts are definitely softening up. Risk is coming out of the market. We are going to watch that VIX 9D closely. That's the one that we really want to get under 20. Great. Pressing on, guys. All right, this was kind of crazy. It's not every day you see an order like this. Because yesterday there was a $5 million call buy. And then last week, last Thursday, there was a $5 million call buy in Merck. Now, Merck is a major pharmaceutical company that's been stuck in the mud. But look on the screen. The $5 million call buy last Thursday was in the morning. Look what Merck did right after that trade. That trade was at $77. What's Merck trading at right now? Let me show you. Because that $77 trade, Merck is now up to 85. Unusual option activity. Follow unusual option activity. If we put Merck on a longer term chart, and Merck could certainly be a bellwether as well. But if we look at a longer term chart, we can see just how beaten down Merck has been. Well, maybe it's time where somebody's coming in and calling a bottom on Merck. Look at some historical data here, but then as I pull up the options chain, slow, slow, slow. I'm attempting to pull up an option chain. There we go. Slow.